just to reiterate, I am the co-founder and CEO of STRATAFOLIO. We're a cloud-based software solution that focuses on that small to mid-market commercial real estate owner who needs to be able to manage their entire portfolio. And so one of the things that makes us different is we're always looking for ways and opportunities to educate our customer base and save them time and money. And through our involvement in the Reach Scale Up program, we've had the opportunity to meet a lot of great individuals, a lot of great teams, including the team at Otso. And with us today is Marissa Limshako, who is a leader in everything she touches, quite an amazing background. She is a West Point graduate, a decorated combat veteran, a 4-time founder, and has been named one of the most influential women in commercial real estate. And we are pleased to have her here today to talk about Otso and how this company and the products they offer can help our client base. So welcome, Marissa.
Thank you, Jerry. Thanks for having me.
Yeah, we're so glad to have you here to talk about Otso. As I've mentioned before, we're always looking for ways to help our customers reduce risk, make more money, and have happier tenants. And certainly Otso does all 3 of those things. So this is going to be a great conversation today. For the people on the line, the format for today is going to be 20 minutes of basically Q&A between Marissa and myself, and then we will open it up to anyone who has questions out there. But I think we will first just start with, why did you and your partner, Josh Feinberg, start Otso?
Yeah. So first, before I get into the story, I think just talking about really quick what Otso does. We are the commercial real estate industry's first comprehensive tenant risk management solution. And we like to say we deliver financial certainty for owners and investors. So with us, every tenant's financial health can be verified, monitored, and enhanced. And back 3-4 years ago, my co-founder Josh Feinberg and I came up with this idea after experiencing kind of challenges ourselves as owners. And so we've worn every hat in the industry. I have a combined experience of over 30 years in the industry. And there were really 3 problems that challenged us. And I'm sure those of you who manage your own space have some of these same issues. Is number 1 was underwriting tenants, especially small businesses, was difficult. Number 2, our exposure in every lease deal was uncomfortable. There's that gap in every deal with what you're collecting from that tenant in collateral, cash deposit, letter of credit, with what you're putting down to get that space occupied, those upfront costs that we have to put down with build out and commissions. You know, there's usually on average a 4 to 6 month rent equivalent gap. So if you were to make the wrong decision, and I'm sure pretty much every owner's experienced this, you have a default, that's quite a big loss. Right. And so that was the second thing that was, frustrating. And number 3, there's no way to truly understand or predict defaults. There's no solutions to understanding that the health of that tenant post-lease after they sign the lease. And unfortunately in our industry, the status quo is the rent roll and validating the rent roll. Are they still paying? But as we all know, that's typically a lagging indicator to knowing if tenants were to default. So what we did was we started with addressing those first 2 problems and creating our bond program. And most recently, we launched the solution to that 3rd problem. So we're this comprehensive solution that can help owners from acquisition through management, through even the sale of their assets.
Yeah. And we're going to dig into both of those programs because I think both of them have really interesting ways to help the customer. I was wondering if you could just speak up a little bit. It sounds like some of our attendees are having a hard time hearing.
They are. Okay, let me see if I can't get my audio settings set here. Is that, let's see. Do I just need to speak closer to the mic? Are you guys hearing me?
If you're as loud as you can, if you can just maybe get closer.
Okay. Yeah.
All right.
Is that better for everyone?
Just a little bit. Is there any other setting that you could do?
is the world we live in, right?
Yes, it
And
is.
we own technology companies. And here we are. Okay. So let me see here if I can. How about now? Is that better?
Still, if you could go louder, it's still pretty
Oh, now
faint.
I can't hear you. Let me just switch over. No worries.
Okay,
Switch to. How about now?
that's better.
Okay. Now I
Yep.
can't hear you, Jerry.
Ah, okay.
Okay, I can hear you now.
All
Great.
right, excellent.
Sorry about that. All right.
Yeah, no problem. All right. So why don't we first talk about, so the first product that you released was which one?
It was the bond. It was the bond program. And so what that essentially is it's an A-rated surety bond that serves as an alternative or supplement to traditional cash and letters of credit. And so what this does is it does two things for owners. Number one, it allows them to collect more than they typically would in collateral from tenants, because it's not as onerous to the tenant if they're not having to lock up as much capital. And so they're
Right.
able to ask for more. And number two, it enhances the tenant credit to A rating because it's backed by our A-rated bond.
Mm. So how, and I guess we can talk about this program first and then come back to Guardian. So how
Yeah.
does this process work then? You have a tenant that's going into a space, and instead of a security deposit, you still want something. So what do you submit in order for that tenant to be essentially approved for this process?
Yeah, so we make this as simple as we could. It needed to be easy for both the landlord and the tenant. And so a tenant simply, we have an online application that they do. You take it in less than 5 minutes.
Okay.
After they complete that application, the landlord will receive our decision as well as a report on our decision, and also as far as like what we've pulled out in evaluating the tenant financials. And from there, say they're approved, say they apply for a $10,000, just to make it simple, a $10,000 policy with us. And so assuming the tenant gets approved, the landlord then works it into the deal. And usually our customers provide an option. Hey, tenant, you can either lock up 10,000 in cash, or we can leverage OTSO, and you don't have to lock that up, but you would have to pay an extra $70 a month in rent. And so, as you can imagine, most tenants end up picking option B. And so the bond is a supplement and a part of the agreement as an addendum to the actual lease agreement. We cover every instance of default in that agreement. And in the case of default, obviously the landlord, say it's like a monetary default, which is most common, obviously, they simply submit the claim, and we pay for that up to the amount of that loss in 30 days or less.
So in a regular world where OTSO is not involved in a bond scenario, can you talk about the differences there versus, so you have a tenant who defaults on their rent payments. What's the world like for an owner in that situation versus when they have a bond with OTSO?
Yeah. So right now with the status quo, that's typically, let's say cash or letters of credit. But it's mostly cash, especially with these smaller businesses, right? The status quo is really, the owner collects up to, whatever they have like locked up. The issue is typically it's never enough. And depending how long that space is vacant, they're essentially bleeding that cash out. And so what's been interesting and really the advantage that they're gaining with OTSO is that they're actually collecting 300 to 400% more than they typically would. So say, for example, one of our customers and even our own properties in Houston, we typically collect 1 to 2 months equivalent in cash up front. Our customers, to include ourselves, we're having the tenant apply for 5-6 months of rent equivalent. And so in the case of default,
we have that extra cushion
Mhm.
that we typically, would otherwise not have. So that's really the biggest value add and differentiation, between us and what's traditionally the status quo of the industry.
Mhm. Super interesting. And so I imagine in the typical world where there's a default on rent and they go through those payments, there still could be some legal conversations going on between the tenant and the owner. But the bond scenario really just simplifies everything, right?
Yeah, it simplifies it from, I mean, they obviously have to put them in some state of default according to their
Mhm.
agreement.
Mhm.
But yeah, like it's again, like having that extra cushion is really what's appealing to our
Mhm.
customers.
Yeah, interesting. So it's 5 minutes for the tenant to apply, and then how long does it take for that ruling or decision to come back on the if the
It
tenant was
takes
qualified?
It typically takes less than a day. We cover up to $500,000 right now. We're actually case by case looking at over 1 million, and in some cases we're looking at some deals actively that are exceeding of that. So anything under $100,000, we can make a decision in less than a day. Anything over, it's a couple of days to a week.
Okay. And what kind of information then does the landlord or owner get back from the bond company about the tenant?
So yeah, they would get that back from us. And so we are able to show them, okay, here our algorithm and our application process actually does two things. Is number one, we do obviously an overall credit check on the tenant. But as we all know, and as most owners know, business credit as opposed to personal credit doesn't always tell the whole picture. And so we really care more about what's in the bank. And so
Mhm.
the second part of the application is them connecting to their business bank account. And from there, we're able to extract information about how they manage their cash management
Mhm.
for 2 years. We go back up to 2 years.
Mhm.
And so the owner is then able to not only see, okay, they're approved with our decision, but they also receive a financial report kind of outlining, here's their average daily balance, like here's how they're looking, giving them, right now, a lot of that when they do ask for that is manual, and maybe they get 3, maybe 6 months at tops of
Right.
information. And so we're really providing them with two things in that is, it's not manual. It's takes a couple of minutes to get
Mhm.
that information all at once.
Yeah.
And we're providing, more history as well.
Yeah. I was looking through some of your social media history in preparation for this, and there was this ad out there that talked about having more collateral as a company because your asset now is backed by an A-rated credit bond essentially here. And I thought that was so interesting. And now as you're talking through this, I understand more about what that is, because when you're submitting your rent roll to your lender and you see you have somebody who is backed by a bond for if there's a default on payment by one of the tenants, well, anyone that has that mark by it, so to speak, as an owner, as a lender, you're just more protected.
100%. Yeah. And
Yeah.
I will say, this is something the market has shown us. As you know, as an entrepreneur, you go in and you bring a new idea, product to market, and you have assumptions around the value prop. And
Mhm.
our value prop was always mainly around getting that additional coverage and having more information and doing a better process of underwriting.
Mhm.
Our customers are actually the ones that told us, wow, like you guys are also backed by A-rated. So this actually directly relates to the value of this asset.
Mhm.
And so the A rating 100% does, and that's what we encourage our customers. Our customers are doing this for every deal. And you can imagine, especially, the majority of commercial real estate is non-credit,
Right.
small businesses. And
Mhm.
so when you can leverage this in every single deal in your asset, you can imagine how much
Yes.
that certain, in ways like some certainty that adds to appraisers. And one other thing, and this kind of goes into the Guardian program, we are able to now let owners, appraisers, lenders know how much comprehensive risk that rent roll looks like. And we've created a scoring system to evaluate tenant risk. And this has started taking this, kind of other program and offering our customers love, because now they're able to tell what is the risk and, what upcoming potential defaults may I have on my current rent roll. Jerry, it's kind of crazy, right? We have this $1 trillion industry.
Yes.
And for years and years and years on end, valuation has been on appraisal. You look at the environmental, you look at the survey, but you look at the rent roll. And like I said earlier on, the rent roll is nothing but a lagging indicator.
Right.
Are they paying rent? Yes. But how many times has any owner and investor acquired an asset just to see a default happen not long after they acquire that asset? It's more common than you would think. And so it's kind of crazy that occupancy drives value, yet there has been no true measurement of the risk of that occupancy until until now, because we're able to provide that. Right. And so that's another way, from a founder perspective, we've been just fascinated by how the industry has told us, look, we have no way of doing this. And so we went back and said, okay, here you go. Here's a way now. And with the Guardian program, we're able to give lenders, investors, owners a way to truly understand, the risk involved. And from an appraiser standpoint, risk equals rate. And so to have this other component to evaluate, really, really helps.
Yeah, I'm going to go into the Guardian program in a little more detail, but on your first program, the bond program, is that one? Can you tell me how that helps from a competitive advantage when you're trying to get tenants into a space? Does that come into play at all?
Oh my gosh. Yeah, that was another thing that we didn't anticipate. We've actually had some of our landlords, and we have some case studies that, especially in competitive markets, right? Where like in Houston, for example, the vacancy rate is, a bit higher. And so and even in competitive markets, we've seen this, but more so in markets like Houston, where if you were to ask a tenant for more than the market would usually ask for, say it's like you're asking for 1 to 2 months. If you were to ask that tenant to lock up 5 to 6 months, most likely they're going to go down the street to the exact same product as yours and be like, I'm going to go to them because I'm only going to have to lock up 2 months. However, when you're telling, hey, you actually don't have to lock up anything with me, that's a differentiator from an advertising marketing standpoint. And, as a business who wants to just lock up any amount of capital is wasteful. So we've actually seen our customers leverage that. In fact, even in tight markets like Austin, Dalee Becker, the owner of Beck Wright Asset Management and Development, she's marketing their properties as deposit free to stick out, in the market as well. Yeah. And Austin's a really tight market.
Right. Very interesting. All right, I do want to talk more about the Guardian program, and just if you could first give just a 1 sentence, 2 sentence overview of what it is, and then we'll dig into what it provides.
So the Guardian program really addresses that last problem that I described, that Josh and I experienced, that there's no way of any sort of like post-lease monitoring, but it's kind of the solution itself has turned into something bigger. And we like to call the Guardian program more of our end-to-end comprehensive package, that helping owners and from acquisitions all the way to sales. So we have this proprietary tenant risk scoring system that takes the credit, payment details, derogatory filings, bankruptcy, and we've created the scoring method to determine the risk of potential default for that tenant. And we take, over 15,000 data points. And our biggest differentiator, as opposed to what even some of these big REITs don't have information to, is, with all of those data points, we're connected to multiple databases, every credit bureau, to be able to extract information even on small businesses, which isn't common, for the status quo of the industry as it is.
Yeah. So let's just say you're an owner who has 95% occupancy, that you've had tenants in there for a long period of time, you may not have any idea, because they're paying their rent pretty much on time. You may not have any idea that they truly are struggling.
Yeah, it's not in May, you don't have any idea.
Yeah.
Yeah.
Yeah. So then when you're putting that rent roll up, and even thinking about this as an owner, of how confident you are in renewals or just the health of your tenancy, it's just how you feel about it, nothing more than a gut feeling. And what Guardian does is it puts a real value to the risk profile of your entire tenancy, correct?
Correct. And I love to give this example. So we do complimentary reports up front to show our customers and potential customers, like, and this is the type of evaluation we can do for you. And so one of our customers, we did a complimentary report, and we do up to 5 tenants to start. And we're just like, I'm always like, give me the tenants, number 1, that you think are great. And number 2, the ones that you're worried about. Oh, that's, that's what you want to know about. Yes. And this particular customer was like, okay, there's this one tenant, I've had them for like 10 years. There's nothing wrong with them. So this is my top tenant, and here are the ones I'm worried about. Well, we, did our analysis, and we came back, and, part of our service is not only the evaluation, but we offer real-time alerts. So every real time you are getting, is there a change in credit? Is there a change in real time? And so this customer signed up with us. And a month later, after signing up with us, that tenant that he was like, this is my best tenant, popped up with 11 liens from Hawaii all the way to New York. Wow. And was like, holy cow. And that had no clue that was coming. So was obviously able to prepare. On the other side of the coin, and that was a small business, on the other side of the coin, we had a customer who had a very large gym as one of their customers, as one of their tenants. And during COVID, this particular business went bankrupt. And so because of the alerts that they were receiving, they knew months in advance that things were going downhill, because they saw that their payment trends their score was going down because they weren't paying their bills. Right. And so before even the bankruptcy was formally announced, they were able to prepare and at least know, okay, number 1, we have to start looking for re-tenanting the space, because this is definitely going to happen. And number 2, they were able to kind of get front in line, as collections as well, because they saw this happening. And I mean, talk to any landlord who has that advantage, when this type of stuff is happening. And this is a very, very large multinational business, credit tenant. And so that's kind of an example how on both sides of the coin, we were able to help kind of customers minimize losses with that information. Yeah.
Both products are incredibly powerful. I'm sure their next question is, what does it cost? How do I sign up and try this out?
Yeah. So the bond itself, the policies are between 5 to 10% of the amount of that policy. So for $100,000 policy, it's going to cost anywhere between maybe $500 to $800-900 a month. And that rate is really determined by how we underwrite that tenant, right? And so that's how much the bond costs. The cost of the bond is passed through the tenant in rent. Right. And so that's, is not coming out of any bottom line for the landlord. Our monitoring and our Guardian program, the reporting and the alerts and the monitoring, that's $25 a month per tenant. And that is as well passed down as an OpEx, so that there's no, I mean, one of our customers said, you know, the cost of this is like changing a light bulb, like,
Right.
and, you know,
Right.
it's really minimal, but it's, again, it's a value that it's providing them with this information that's going to save them, you know, in the future. And so both are fairly, you know, inexpensive. And again, just passed down as an OpEx or through rent.
Yeah. Well, this has been a really fascinating conversation, Marissa. Is there anything that we haven't covered that we should talk about before we close it up?
I'd love to talk through just how one of our customers, like I said, we talked so much to our customers, and it's just been fascinating to see how they've creatively used us for solutions. And so what's recently we found was how a customer used us from end to end. And so this particular customer is a lender owner, and how they're using us is they're using us for their acquisitions, right? So as they acquire property, they use us. And so they're able to determine, is this a good acquisition to make? And once they acquire the asset, they are obviously incorporating our monitoring on all the tenants and those assets. And number two, they're looking at opportunities in which to leverage our bond in every deal. Or in some cases, they're going to mandate, you know, like, hey, this is an add-on insurance that we're adding on to every lease. And then, you know, in this particular case, they look to turn around 18 to 24 months. So turning around the asset on the other end, they're leveraging our Guardian reports for the sale, you know, to provide that information on the sale, while again, they have that additional collateral that they have in protection in every lease because of our bond, on top of the A-rated enhancement to the tenant credit. So I just thought that was just beautiful.
That is wonderful.
I actually didn't anticipate being an end-to-end value. And you know, as founders, it's like, you know, most of the time your customer tells you how the solution is being implemented. And so I just thought that was fascinating and incredibly creative. And look forward to, you know, leveraging this as a best practice and urging, you know, other customers to use us in that way.
That's fantastic. Congrats on all your success. And
thank you.
And we have some information up here on the screen as well, so that you can take a look at, for anyone who is watching this, they can reach out, connect directly with Marissa, reach out to her by email, by phone. I'm sure she'd be happy to talk to you about more about what OTSO does and the products and services available. You will soon see OTSO on our partner page. So we also can get you some information if you have questions. And take care, everyone. I appreciate you being here. And if you are in 2 weeks, we will be having another LinkedIn with a woman named Natalie Campos Goodman from Incentive Find. And her company helps owners find incentive programs for any build outs, any improvements to properties. Another really great solution for owners out there to reduce their risk, make more money, save more money. That's what we're all about. And of course, STRATAFOLIO is always there, ready to help you manage your portfolio as well. Thank you, Marissa. Take care.
Thank you, Jerry. Thank you so much.
All right. Have a great day. Bye.
You too.